Good afternoon. Today I'm going to tell you about the Mount Thirsty Cobalt Nickel project. Very highly leveraged to the cobalt price, an advanced project, a high-grade project, low capital expenditure and significantly undervalued project. I'm going to tell you about our active development program for 2018. We're going to be advancing a pre-feasibility study for Mount Thirsty, and we've also got some gold drilling underway as we speak at Burbanks, just near Coolgardie. That's our dual commodity strategy, cobalt and gold. Great location, right in the middle of Western Australia's famous goldfields region. Great infrastructure, there's roads, rails, pipeline, everything right there for our project, and the workforce, of course. So Barra's been around for quite some time. 18 years we've been listed on the ASX, yet we've only got 473 million shares on issue. Our board's been very diligent with their capital and very careful not to issue too many shares. $2.3 million in the bank as we speak, which is fully funded for our endeavours in the cobalt and in the gold space immediately in front of us. We've got 3,000 shareholders, many of whom are joining us today, so welcome to those shareholders. And we're also joined, I've got my entire board in town as well. So we're all available at the booth to speak to you about these projects. So let's talk about cobalt. You've all heard the electric vehicle story, so I won't spend too much time on this, but certainly is a great story. In 2010, it cost US $1,000 per kilowatt hour of battery capacity. In the few short years since then, the price has come right down now to below $200 per kilowatt hour. In a few more years, we'll reach the point of price parity, where your total cost of ownership for an electric vehicle versus a petrol vehicle will reach parity. At that point in time, significant expansion in demand. Governments are putting out mandates to support this economic driver. China are saying 12% electric vehicles by 2020 and India 100% electric vehicles by 2030. The automakers have responded, of course, and all of the major automakers have set themselves aggressive targets to get these electric vehicles on the road. But the cobalt price is only a very small component of those products. For your typical electric vehicle, a Tesla Model 3 there, for example, the cobalt only makes up about 2% of that product, so they're relatively insensitive to the cobalt price. Similarly, in your iPhone, we've all got one in our pocket, there's about $1 of cobalt in your iPhone. So Apple really doesn't care if the price goes from $1 to $2 to $3 for a $1,000 product, relatively insensitive to that price. It's not just about the batteries. Cobalt's also used 34 other industrial uses for cobalt. The chart there shows the 120-year price history for cobalt. It's gone up and down over those years, but very much today's cobalt price is within the normal trading range for cobalt. Cobalt certainly is the hot commodity at the moment, but it's totally in step with that historical demand. We believe that we've got a structural shift upon us and there's going to be further upside ahead. So that's the demand side. Supply, very, very scarce. 97% of all cobalt is mined as a byproduct of nickel and copper mining. These projects, if the cobalt price goes up, that doesn't necessarily incentivise them to start their mines. They need the nickel price to go up or they need the copper price to go up. I'll tell you about Mount Thirsty. We're more heavily leveraged to that cobalt price and more ready to respond. There's also a very large barrier to entry. Expensive business starting cobalt mines, particularly if you're going down the HPAL route. Our project, however, we can liberate the cobalt at atmospheric pressure, therefore we've got a far cheaper capital bill, $212 million. Now, if that's not enough for you on the demand and supply, you need to know about the sustainable supply story. 56% of all cobalt comes out of the Democratic Republic of Congo, the DRC. 20% of this is from artisanal miners, and of that, many of them employ child labour. Your multinational corporations are now under pressure from your sustainable, your ethical investment funds, and they're insisting that these companies trace up and down their supply chain to make sure that the business practices in their supply chain suit those funds. Your multinational corporations will be looking to seek alternative supply. Based on all of this, we see the cobalt story not being a story around the cobalt price, this being a story around securing supply. People up and down the value chain are going to want to put their foot on cobalt tonnes, and that's where Mount Thirsty comes in. So Mount Thirsty Cobalt Project, located right near Norseman, great location, only 4 kilometres from the highway, the main highway between Perth and the East Coast. There's a railway right there, there's a gas pipeline right there, there's a town, there's established workforce, everything is right there for us, ready to go. A lot of positive attributes, low strip ratio, we don't have to move as much waste to get to the ore. Deep weathering profile, our cobalt is fully oxidised. The drill chips from this material, you pick it up very powdery, it's like talcum powder, 100 micron, very fine material. And that cobalt is tied up in a manganese mineral. It's a mineral called absilane. Manganese is a very mobile element. Cobalt moves around with it. We can get that cobalt out with atmospheric pressure. Many other cobalt projects, the cobalt is tied up in the silicates. They need to hit it hard. They need to hit it hard with high pressure and high temperature. Our grade, roughly double that of a typical nickel laterite project. There's also a little bit of a corporate jigsaw puzzle there as well. It's a 50-50 joint venture with Conoco. They're great joint venture partners, always funded their share of the studies and worked very, very collaboratively. Just over the fence, however, famous Western Australian prospector Mark Creasy is just about to float his side of the Mount Thirsty deposit. We've got 32 million tonnes. There's another 12 million tonnes on Mark Creasy's side of the fence. It's a company called Galileo and it's listing on Friday, and we wish them all the best and very hopeful that they come on at a premium, and great news flow and a great buy signal for Barra Resources. So we've completed a scoping study. This isn't an exploration play, this is a development story. The scoping study was published late last year and came out with very, very attractive economics. Conservative assumptions. Price, 72,000 cobalt. We're currently up around 90,000. Capital, low capital, $212 million capital. A lot cheaper than your typical big autoclave required for a high pressure acid leach project. Long mine life, 21-year mine life. Fantastic, long life, low capital project. Cobalt recoveries, nickel recoveries, they're actually quite low. We see that as tremendous upside. We could get 95% recovery going down the HPAL route, but we feel, and based on some earlier test work from back in 2009, 2010, that we can tweak those recoveries up and that goes straight to our bottom line. Here's the sensitivity. Because 84% of our revenue comes from cobalt, we are very, very highly leveraged to the cobalt price. As the cobalt price goes up, as it inevitably will, the NPV of our project rapidly rises. The scoping study was published there. We had an NPV of $290 million at a 72,000 price. At a price of $90,000 US per tonne, today's price, the NPV is up around $500 million and more upside to come. So pre-feasibility study, we've been out tendering, speaking to all of your top mining engineering houses and so forth, and we've prepared our budget for the pre-feasibility study, and that's all ready to go. There'll hopefully be some news on that very shortly about kicking that one off. We've got a bunch of value-adding ideas. The scoping study is just a base case. We're going to improve the value from there. We're going to look at options like pre-concentration. If we can get the grade of the feed up, again, that flows right through, more metal coming out the back end of the plant. There was some old test work that suggested with the addition of a little bit of sulfuric acid, we'll be able to get higher recoveries again. The mine plan, very, very simple mine plan, just a scoping study. They simply start at the top and mine their way down. A lot of value left on the table. We can really optimise that mine plan and add a lot of value. Importantly, that pre-feasibility study will be prepared to a very high standard. I've seen far too many projects dive straight into the bankable feasibility study or straight into production and get it wrong. We're going to be making sure that we assess all the options in the pre-feasibility study, and when the time to bring strategic partners in comes, we're going to be ready, and that study is going to be such that any multinational corporation can have a look at our work and say, yep, that meets our standard, let's invest in this one. So let me tell you about our gold. We've also got the gold as well. Let's not forget about the gold. Barra was listed on the back of the gold. It's been in and out of production. It's served us well over these years. During those tougher times, we were able to go to the market and raise money go into the ground and get our money out of the ground with small-scale gold mining operations rather than having to go and issue more shares, more bits of paper. Now, however, we've recast our strategy. We're not going to go after that small-scale mining anymore. We've set ourselves a target of getting 500,000 ounces on the ground before we go mining. 420,000 ounces have already come out of these mining areas, located right there in Coolgardie. We're presently drilling at Burbanks. Our geologist drives 5 minutes home each evening and cooks dinner for her family. So great real estate, great location. So here's the drilling. That shot was taken last week. You can have a look at our website. There's a drone video there showing the drilling underway. You can see the mill in the back. That's owned by a third party, Maximus, and you can see the historical pits and indeed the historical underground workings. That mine, we've been drilling around that in 2017. Fantastic intercepts, very high grade system, and we're looking to extend that mineralisation. We've already got a resource on the table there, 95,000 ounces of gold and 5 kilometre strike length of a fantastic mineral system that we 100% own. That 500,000 ounce target that we've got, that isn't a number we just plucked out of the air. We've got a very strong geological team. Our exploration manager's been with the company for 14 years now, knows this system absolutely backwards. We also brought in a fellow called Alan Neeshaw, former Vice President with Anglo Gold, and they helped formulate our gold strategy and set this target of 223,000 to 564,000 ounces. That's what we think we can find there. Bunch of historical workings and big gaps between those workings that need some drill holes put in them. So that's what we'll do. Other companies have had a lot of success in this space. Think of Northern Star, Evolution. They've all started on the back of historical mines that have been given a birthday. We've also got Phillips Find, just to the north of Coolgardie. This one's more of a greenfields target, more upside, more speculative. So this project here, large areas. There was some small-scale mining done there, 33,000 ounces came out, but the target we're going to be testing later in the year is called Truth. It's 6 kilometres long, 1.5 kilometres wide, and there's a real confluence of structures there, fold and thrust belts, and also geochemical anomalies, just screaming out for some drill holes. So we'll do that later in the year. But here's the real slide. Here's our finished slide. And I'm really pleased I got through my presentation so I can spend some time on this slide, because this is really the buy signal for Barra. These are the 5, in my view, the 5 bona fide cobalt projects in Australia, the ones that enjoy all of those great real estate, the great mining jurisdiction of Australia that we're in. 5 bona fide projects. Out of those projects, ours is the lowest capital bill. We don't need that high pressure leaching. We've got the highest grade, 0.13 cobalt. We've also got the highest proportion of revenue from cobalt. 84% of our revenue comes from cobalt. Our mine will be a cobalt mine with nickel credits. Many of these other mines are nickel mines with cobalt credits. As that cobalt price goes up, we're more ready to benefit from that. And then the buy signal down the bottom there, market cap, $26 million for Barra is the market cap at the moment for our 50% share of the project. Look at those other market caps, right up to $500 million there for clean tech, and certainly other market caps there very, very high. So we believe we're significantly undervalued to our peers. But I'm not here to whinge about that to you. I'm here to tell you about the hard work we're going to do to achieve those market caps. And the way we're going to do that is progress our studies. You'll see that our studies, we're relatively early stage, well placed to accelerate that, but relatively early stage, just about to kick off our pre-fees. These other guys are probably a year in front of us, and as we do our hard work, we believe we can get up to those valuations. So to finish, please buy Barra Resources, come and have a chat to us, and thank you very much for your time.